I'm not concerned. In fact, I think that a lot of the pain that the Bitcoin community has absorbed is because of the slow response of the regulators. If the regulators had moved faster, in order to, if they had moved more aggressively in 2018 or 2019, you wouldn't have seen all of these, crypto casinos spin up the way they've spun up. One of two things will happen with regulators. They will either move much more aggressively in a fairly regressive, conservative approach, and that means they'll just shut down all the other crypto innovations, in which case Bitcoin will still be a beneficiary. Because in a conservative world, Bitcoin is the apex crypto property and the apex crypto asset, and people will simply hold it as a long-term store of value. And if the regulators said everything in the crypto ecosystem is now, forbidden, all you can do is buy Bitcoin and hold it and sell it at the end of its useful life, treat it like gold, Bitcoin would still benefit. Right? The other extreme would be the regulators act proactively, they act progressively, and they provide a path to registration of a digital commodity, a path to registration of a digital security, a path to registration of a digital token, a path to registration of a digital exchange, and a path to registration of a digital currency. Right? And if they said you want to issue Tether, you have to file monthly statements, register with this, banking supervisor, and take on these responsibilities to have these reserves and abide by these guardrails, you can issue a stable coin.
Hello and welcome to Money Talks. In today's video, Michael Saylor updates about the regulations in the crypto space following the FTX collapse, Bitcoin's upcoming price trends, along with adoption scenarios and ideas within the crypto space and what is needed to make them work.
And the truth is, the only thing that is clearly good for Bitcoin is if we were able to disentangle ourselves from the crypto casinos. Right? Because the crash of Terra, the crash of Luna, the crash of Celsius, the crash of FTX, these have been painful events, and Bitcoin is cross-collateralized, and they're selling Bitcoin when they're crashing their doggy coins and their hamster coins and their yo-yo coins. And so shutting that down will be good for Bitcoin. It'll take the volatility out of Bitcoin. And then these other regulatory guidelines, at the end of the day, if you simply said, you're not a commodity unless you're an asset without an issuer, it would knock out the top 50 coins other than Bitcoin. And every institutional investor would say, I get it, Bitcoin is special. Bitcoin is a commodity. Ethereum, Solana, Ripple, name every other coin that ever had an ICO, every coin that ever had a pre-mine, every coin that has a centralized foundation, a management team. Every other coin would be deemed as a security, and as a security, they would all have to make fair disclosures. When they made those disclosures, 95% of them would collapse. A few would be left, and people would say, well, this looks kind of like a tech stock. And then they go, well, maybe I like the tech stocks better. Probably they'll collapse, right? And I don't know what's left, but I mean, the argument in favor of a digital security is, wouldn't it be great if I could issue it faster and it traded 24/7, 365, and then someone could, like, if you said to me, you can take custody of your Apple stock on your Android phone if you live in Zimbabwe, and I can't get a JP Morgan account, I would think, okay, well, that's good. I can give Apple stock to my friend in Zimbabwe on an Android phone. So maybe the idea of a security circulating on a mobile network outside of the control of the 20th century banking system, maybe that's a good idea.
MicroStrategy founder and Bitcoin evangelist Michael Saylor had some strong words about fallen FTX founder and one-time billionaire Sam Bankman-Fried, or SBF. I think this crypto crash accelerates regulatory intervention, Saylor said. I mean, in fact, in a sense, SBF is like Jordan Belfort of the crypto era. Instead of the Wolf of Wall Street, they'll make a movie called The King of Crypto. Bankman-Fried has given plenty of fodder to his haters within the past week, helping to trigger a crypto crisis that could turn out to be another movie-making event.
I think what surprised me the most is fairly intelligent people and entities not realizing everything I just said to you fast enough. Right? For example, it seems quite evident, right? If you were doing, I didn't have a penny on FTX. I wouldn't invest a penny in FTT, right? I mean, from the very beginning, if people that have any business acumen or background, any legal sense, any ethical training, or any technical training in a university, if they would look at this, they would say, yeah, it doesn't make sense to invest in 20,000 random tokens that get spun out of nowhere that trade on an opaque offshore exchange with nearly infinite leverage, right? Doesn't make sense, but it surprised me that so many otherwise intelligent people put so much money into these things.
Big institutions.
Why would a pension fund, why would a VC, investor, why would they put hundreds of millions or billions of dollars into crypto tokens and crypto exchanges, and why would they pursue these ideas in such an irresponsible fashion? And sometimes you almost want to tweet, like, people will literally lose $1 billion chasing after these crypto casinos before they'll put $1 million in Bitcoin. It's just fast money, borderline greed, I guess, thinking that somehow Bitcoin is too straightforward an idea. It's like Bitcoin is too honest, too ethical, too rational. And so the conclusion is I have to skip over that and I have to go for the next thing, the next Bitcoin or the next good idea.
I think Bitcoin's boring.
And so that's what surprises me, that people with billions of dollars in education that should know better, when they're granted something which is ethically sound, technically sound, economically sound, and the first perfected money and the first truly open, fair, decentralized monetary network in the history of the world, when they're staring at it, their reaction is, it's too boring. How do I take another crypto risk? And so I guess it just takes, these billion-dollar blow-ups of Celsius and Voyager and FTX for some of them to start to get the idea that Bitcoin is the innovation, and they should come back to basic first principles. Mm-hmm. If they said, okay, well, you want to issue a digital security, you have to do it this way, fill out these forms, and every month or every week or every quarter, this is what you do, then what you would see is a collapse of all the true scams. Mm-hmm. You would see the VC that have been trying to launch these other things, they would have to go through a registration process. Now you would actually understand, and you have the full disclosure and transparency. Many entrepreneurs would say, this is too hard. You get the sense that some of them never bother to hire a lawyer or get a legal opinion, right? It's like, I have to pay for lawyers and accountants in order to be in the business. This is too hard. You'll see a rationalization. 99% of all the tokens will go away. You will see some stable coins. There's a bona fide need for a coin like a Circle or a Tether. The world wants it. Maybe not in the U.S., but outside the U.S., the world wants it. Mm-hmm. So I think you would see some of those. I think you would see some digital securities. I think you would see. You'd probably see actresses and musicians. They would say, hey, I'm going to issue my, Katy Perry token, right? But they would do it with a lawyer in the compliant, ethical way because they don't want to risk their reputation. The industry will morph. It'll change. And at the end of the day, Bitcoin will benefit from that too.
So, do you agree with Michael Saylor's take on regulation and Bitcoin adoption? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.